Welcome back to Success with Steven. My name is Steven Smith. On this channel, we talk about everything financial literacy. And today I'm going to be talking about the secrets that the credit bureaus do not want you to know. And this is going to be information that I actually received while I worked at three major financial institutions. There were three different banks that I've worked for. And this is the information that I've gathered from doing credit card applications, credit limit increases, things of that nature. Also doing some information as far as verifying and confirming that I'm speaking with customers. So all of this I've gathered and I've seen these things, and I just want to go over them and things that you may not have considered that credit bureaus actually do look at, and exactly how they use your information to determine what you qualify for, what you don't qualify for, and also how a lot of things get put onto your credit report that can be negative. So without further ado, let's get right into the video. And I want to start off by just giving you a warning, because some of the information that you are going to hear may sound like it's discriminatory. There's no really other way that I can put it. And for this information, I will say that when I've asked about it, I've been told that it's based off of an algorithm. And a lot of the things that you're going to hear are based on systems that automatically do this without them, of course, having to be done by any one individual, because this is a financial system and it's something that's already been set up and in place. A lot of us just work for these institutions and, don't have any type of we don't have any type of regard to what's actually going on, or to be able to control it for that matter. All right, so let's get right into it. Now, I want to talk about the credit bureaus and who are they. I've mentioned this before, but I want to say it again because it's very important for people to understand this. The credit bureaus are not government agencies. I'll repeat that again. The credit bureaus are not government agencies. They are publicly traded companies. You can actually invest into these. They're owned by shareholders, and the government does not run these companies in any way, form, or fashion. But the CFPB and the FTC oversee them. Anytime I've told you to do any disputes, what are the two things that I've used? And there's only been two things on this channel. It's either the CFPB or it's the FTC, because those are the people who are supposed to oversee the credit bureaus, even though a lot of things don't actually happen as far as being held accountable for illegal practices or things that they are not supposed to do. Now, with that being said, we know who does regulate them. And these three credit bureaus are legally required to provide their consumers with one free credit report each year, which is also why I tell you to go to annualcreditreport.com. And this ensures that these people who are using the credit bureaus are aware of what their credit scores are, what's their financial standing, and consumers can receive additional reports for free as well. And until further notice, that's going on right now. And you can also request your report from these credit bureaus. And you can now request them, from my understanding, as many times as you want, again, until further notice. Now, with the CFPB and the FTC being the ones to make sure that the Fair Credit Reporting Act is enforced, they are supposed to ensure accuracy of your report. They also are supposed to ensure the fairness, the privacy of consumer information. And, these are some of the key points that are supposed to be enforced. And that's a consumer's ability to dispute incorrect information, bureaus being transparent about what is on your credit report, a consumer's ability to easily access their credit information, requires anyone seeking someone's credit report to be legally permissible. Okay. And if a creditor fails to comply with the Fair Credit Reporting Act, they are subject to substantial penalties. The FTC would require some type of compensation for damages per each violation by the creditor. All right. So I want you to keep all this information in mind while we're going through this, Because as we're going through this, some of the information may start to seem like it kind of contradicts based off of what we're looking at here and what's supposed to be enforced and what's supposed to be upheld. Now, how do credit bureaus actually make money? Credit bureaus make money by data furnishing. This is the simplest thing. Anytime anyone has talked to me, I always say the credit bureaus are just data furnishers. That's all that they are. So credit bureaus, they primarily make money from credit reports and the data that they collect on you and me. When creditors and lenders send data to the credit bureaus about consumer credit behaviors, they do so for free. The bureaus may also collect free data through public records from courthouses or other sources. Additionally, they also collect information about rent, utility payments from those who report it. The bureaus then compile all this information, they organize it, and they sell it as a credit report. They also sell the data they collect in this manner. And for this video, we'll be discussing one of the main purchasers of these information, and that's going to be banks. Financial institutions purchase this information in order to determine your credit worthiness, amongst other factors. So let's actually get into what this secret is and how it actually affects us while we're trying to get lending. And it also will affect us when we're trying to learn about credit, but also repair credit. Okay. Now, this is a secret that's actually not so secret, but we're going to break this down into parts so that we really understand how this is made up. Subprime lending. If you guys don't know what subprime means, it just means people with bad credit. If you're prime, you're someone that has good credit. So subprime. I will tell you this now with 100% certainty that banks make more money off of subprime lenders. The worse off you are as far as credit, the more banks can justify ridiculous interest rates. Yes, they make money off of particular charges and bank fees, but a majority of the money is made from interest. Do not you misunderstand that. It's interest. So credit bureaus are incentivized to keep derogatory information on your report. This is the reason why they fight so hard to keep that information on there, and they don't want to remove it. They are making money by making sure that negative information stays on your credit report. It's basically as simple as this. Subprime lenders make the bank way more money. You make way more money when they can charge you 15, 20, 30% interest rate on other products that someone else may get, 2% on, 0% sometimes. And they can justify that and make it just the most outrageous thing ever. And how I like to compare it is, think about a prison. When people go to prison, they tell you that it's supposed to rehabilitate them, right? But then when they get out of prison, what do? They don't let you vote. They will make sure you can't get a good job. A lot of things and opportunities are now taken away because you have a felony. So then what happens? People who have felonies are more likely to end up committing the same crime that put them there in the first place, thus causing a cycle. But I was never rehabilitated. I never had the opportunity to actually do better. Instead, my situation was worse. That's kind of how I look at bad credit. So when you have someone with a bad credit score and they have to keep that on their credit report for 7 years, you're basically 7 years, unless you're disputing this information, that you cannot get a good loan. Now, what happens when you need some money in order for you to get something like a car? Now they're going to give you a crazy 29% APR interest rate where you're damn near paying for this car twice. It's ridiculous. Now, what happens when you're in a situation where for some reason, maybe you lost your job, you defaulted on this loan? 7 more years, that's on there. It's a cycle that continues. So that's why I always say these lending practices are predatory in nature, but it's not by accident, it's by design. So here's a statistic. 44% of Americans have inaccurate information on their credit report. I actually believe this is higher, but let's just say it's 44%. A majority of that information is actually negative. It's not positive. You don't see anybody accidentally having good credit, right? It's bad credit. And it's from inaccurate information. I would even say it's 70 to 80% of Americans, but this is not accurately reported. Okay. And inaccurate information by design is put on there. So collection agencies, banks, credit bureaus, they collectively have come together and they coordinated this on a mass scale in order to make sure that they can keep a good amount of subprime lenders to be able to charge them astronomical interest rates. Okay. What I'm trying to say is you are not a customer for the credit bureaus. The credit bureaus basically treat you like a digital product. You are a digital profile that is for sale. And I can give you an example of that. Open up your Experian app. When you have bad credit, how many high interest rate credit cards with a bunch of ridiculous fees do they try to get you to get? You can't get away from it. Go to Credit Karma. When you have bad credit, how many of these high interest predatory credit cards do they tell you that you're pre-approved for? It's done with intent. It's done on purpose. And again, this is by design. They don't care about you. They don't care about me. They want to keep this information on your report in order to make money. Okay. And I just want to make that very, very clear. Now, we want to know how to handle this. We want to know how to deal with this. And it's very, very simple. Information. Information is key. This is the reason why I provide all this information for free. All this information is to level the playing field. Okay? Because a lot of us are not taught this. So someone has to provide this information. Okay? So there's no way to stop this system. There's no way for us to say, hey, you can't do this. There's a way, but there's people who are there in order to actually fight unfair financial practices. For the average everyday person, we just need to get a handle on how to deal with this immediately and effectively. And that's what I'm making content for. So this is a game, okay? And the game is rigged. That's okay. As long as you know the game is rigged, you can figure out a way to get around the rules. That's the way that we have to play it. And the way to get around this is information. Information is key. For example, an easy way to increase your credit score, which I recommend, is by getting a credit card. And you're probably going to say, why would I get a credit card if they're, if I have bad credit and they're predatory? A credit card is a revolving account. And what I mean by that is it continues and goes on forever until either you close the account or the account is defaulted on. But it is a constant. Basically, think of it as a loan that's infinite unless you cancel it or you close it. Why do you think that if you get an installment loan and you pay it off, your credit score doesn't go up? Credit is based off of how well you pay debt. Credit is not based off of you paying debt in full and no longer having debt available. That's why the moment you pay debt off, your credit score is decreased. Credit cards are better for banks because they constantly have a revolving line that they never have to actually close. That way, it gives them a better opportunity to charge you interest, potentially. That's just all it is. So banks have a better opportunity to make interest for you. If you pay off anything, it doesn't help them. So in a sense, you are penalized for not participating in actively paying debt. That is the only way to generate a credit score. It's the only way for you to actually maximize your credit score. So our goal is not to try to, get the system to conform to us. The goal is to try to leverage debt to make us money and not become another negative statistic in the end. That's the goal. We do that, of course, by learning information and then being able to execute on that. All right. Now, I've discussed this a lot, but I want to go over it again because it is important and repetition is the mother of learning. All right. So you've seen this before. I've talked about it numerous of times, but payment history is 35% of your credit score. The other 30% is utilization. Utilization is the amount of debt that you owe as opposed to what's available. So just on-time payments and utilization makes up 65% of your credit score. That's more than half. The only way you can get utilization is by having a credit card. That doesn't apply to any other type of product besides credit cards. That's letting you know right there, you need to have a credit card just to have a good credit score. So it's kind of thrust upon you in this credit game that you need to have a credit card product. You just need to have it. All right. So just think about that. You can't even get 30% of your credit score unless you have a credit card. Banks like credit cards. Banks like debt. All right. So as long as you're reasonably paying debt on time, and as long as your utilization is managed well, you're already going to be hitting 65% of your credit score. All right. So that is really, really good. And another thing I want you to understand is that when I talked about this being like it's discriminatory, in which I'll get into, credit is just really another algorithm like social media. The same way you have things come across your feed, the more things you click on, the more things that it shows you. It's behavioral based. OK, an algorithm is just a process or set of rules, and it's calculated just based off of your behavior. That's how it's determined. All right. So I want you to understand that I can offer you all the information in the world. I can offer you easy strategies to remove negative information from your credit report. I can do this all day. But the thing is, at the end of the day, your behavior determines what's going to happen with your credit and your financial standing, your behavior. So at the end of the day, only you can fix your behavior. A YouTuber can't fix it. The credit bureaus can't fix it. A collection agency can't fix it. A credit repair agency company, they can't fix it for you. You have to have better behavior in order to control debt, because unfortunately, even though it is predatory, you have to fall for the trap in order for you to become a victim of it. Now, after you understand that what the game is, you're no longer a victim, you're a volunteer if you continue to fall into the trap. At that point, you can't be helped. So even though I try to give strategies to make everything as easy as possible to remove all this negative information, unless you change bad behavior when it comes to this type of stuff, you'll fall into the same process and then it'll become a cycle. So just know that your finances are in your control. There is a way to, of course, repair bad credit, because whoever you were 5 years ago, 2 years ago, last year may not necessarily be the person you are today. And that's not a reflection of how well your credit worthiness is. That's not a reflection of you at this moment. However, in this system, as we know, it is not set up for you to win. It's intentionally set up for you to fail. But we know how to overcome that by using information. So let's get into a couple of things that the credit bureaus actually use to determine your credit worthiness and whether or not you get approved for credit lines, loans. This also affects how the credit bureaus put negative information on your credit report. And I've talked about this a lot, a whole lot. So we're going to talk about address. Your address is a huge part of approvals and how much you are approved for. I'm going to tell you this based off of what I've learned by working at some very large financial institutions. Banks use information. They use your information from LexisNexis, more than any other place, I would say, and the credit bureaus in combination to approve you lines of credit. They'll even use the income for your area. Okay. So this is what I'm trying to go over. If you live in a low income area, you can have a credit score of 800. Someone else who lives in a high income area can have a credit score of 680. They will get approved for more than you just based off of your geographical location. That's the way it is. That's why I said I would say that's discriminatory, really, in nature, but it is something done. They base this off of the people who live in your area, how much money they make, how many people in your area file for bankruptcies. They use all this information to determine whether or not they will give you credit. They also use things like, how many old addresses do you have? Have you lived at 20 different addresses over the last 10 years? You look unstable. They look at that. Where did you live then? I recommend everybody get your LexisNexis report. Go over that report. Look at all the old addresses. Look at all the old phone numbers. Look at all the old employers. Look at all that information and see what's there. They base a lot of your approvals on this type of information. So do yourself a service, pull up that report, go through it. If there's anything that's not benefiting you on that report, remove it. You're not doing yourself any favors by keeping that information on there. Okay. Some of this stuff we can't combat, but there are some things that we can do. Okay. Because here's the kicker. They can't have any information that you don't allow them to put on there. These are just data furnishing companies. This isn't the government. You can control what's on your report. It's up to you whether or not you leave it on there or not. Anything that's on there, you can dispute. It's your right. It's all up to you. So don't let anyone tell you otherwise. That is a fact. All right. So let's get into another factor. Oh, also, before I leave addresses, when you have addresses, this is also how they can determine where your collections are. They can base that off of your address. So you definitely, I've talked about this a lot. Addresses really do matter. Delete old addresses that are associated with any negative information. However you have to get it done, just do it. However you have to get it done, take care of it. Let's talk about owning and renting. So if you are a homeowner, homeowners have to go through a lengthy process in order to get approved for a home. Now, if you did all your due diligence and you have a good loan officer, it can be fairly quickly, but there are a lot of steps to that process. Now, again, if the information you have, your credit worthiness can expedite this process. Excuse me. But the reason why homeowners tend to get better approvals than people who rent is because homeowners have an asset that banks can pursue. If they had to take or come after your asset like your home, if you default on a loan, that just makes it a little bit easier to lend to you because it's kind of less risky when there's something on the line. Check your LexisNexis. If you are a homeowner right now, they have the value of your home on that report. Pull that report and take a look at it. They actually will give you the value of your house on that report. That's a backdoor thing that they use to determine your credit worthiness. And this is information that's not on your credit report. You won't see it there, but this is information that is used. So you definitely want to go back, take a look at that report, and determine what information you do or don't want on, or you do or do not want on that report. So if you are a renter, renters look like, they're not as stable. Renters look like, just where your mindset is as far as your finances. They'll look at people who own a home as maybe being someone who's more financially conscious. So you'll want to take that into account. And this is stuff that you, of course, have to put on your credit card applications. So this is definitely information that, it's on there for a reason. They're asking for a reason. These are all determining factors. There is a point to it being on there. It's not on there by accident. This is all done by design. Remember that it's all by design. It's not accidental. None of it's accidental. Next thing is going to be your age. Now, this can vary based on your situation. Now, depending on your age, if you're young, a lot of times you don't have a lot of credit. So, of course, that will affect your credit worthiness. That kind of goes without saying. 15% of your credit score is determined by your credit age. But this also works vice versa. If you're someone who's 70 or 80 years old, they may pull back on the credit that they can approve you for because they may feel less certain about whether or not your life expectancy is ideal. So if they're looking at you at an age where it looks like you may not be around in 20 years for a 20-year loan, they may pull back on what they approve you for based off of that. So that is also something to consider when you're looking at your applications. Now, you can't change your age, of course. You know what I'm saying? It's impossible, but that is something that is a factor that the credit bureaus actually use, and they are reporting and determining what they can actually give you. Now, the next one is something else that I would say you can control this information for the most part, but your employment. So if you're employed right now, an employee has a better chance of receiving credit or getting approved for an application than an individual who's self-employed. And that probably, again, goes without saying. A person who's employed looks more stable. They also have the option of garnishing your wages if any credit lines were to be defaulted on. And of course, just so you know, you give people this information. You don't have to have your employer on your credit report, so you're letting them know where to garnish from. You also have this information on LexisNexis. So just be aware that this is information that you're allowing to be reported. So if you don't want your information on there, you have the option to getting it removed. But that's something that they can look at as, okay, well, if they are a risk, we know where they work at. We can do this to recover this if we went to court, got this default judgment or got this judgment and, pursued it that way. Now, when you put this on your application, being self-employed, it greatly affects your approval odds. And now in this scenario, I'm not talking about a business credit card where you do a business application. I'm talking about a personal credit card or personal loan if you were to put that you are self-employed. Businesses also get scrutinized for certain things, but this is just, I'm talking about only personal in the scenario that we're looking at right now. Now, the next thing we have is income. I'm sure all of you have seen this on your report. And if you're applying for credit, when you choose your type of income, that matters. For example, they have income from employer. They have income from retirement. If you were to put your income from retirement, that can be scrutinized. People who are retired are more well known to be on a fixed income. So if you are on a fixed income and let's say you can't work overtime to try to accumulate some more funds in order to pay off a higher debt, you don't have the ability to. You're probably going to be on Social Security. Hopefully that's still around in the future. And then you're probably going to be on some type of maybe you're using what you had from your 401k. So between the two of them, you're going to have a certain amount that you're going to receive every single month, no more, hopefully no less. And if that's the case and you have only that fixed amount, we can't really say that you can handle large lines of credit or large loan approvals. Now, large reports of income, you look like you can handle it. But here's something that you may not know. On your credit report, it shows how much debt you have, which is why you need to keep your utilization low. When you have large amounts of debt, banks take into account the amount of debt you have on your credit report. They also take into account what your income is. They get your debt to income ratio. So if you have $60,000 worth of debt, even if you're making $100,000, look at your debt to income ratio. You have so much debt, but you're making so much. Why isn't the debt lower? that looks bad. That's something you have to consider when you're trying to apply for these things. So take into account what your annual income is. Believe it or not, if you live with someone or you have a roommate or a spouse, you can actually include their income on your application. And usually on most applications, you actually see that. They can take the household into account. Now, you also want to take a look at that and think of your marital status, which, as a matter of fact, let's just get into that right now. So your marital status can actually determine what you receive for credit and approvals. So generally, people who are married have a higher income because it's based off of a 2-income household. Okay. You're also held accountable if your spouse will default on a loan. So keep that in mind. Now, that gives the bank someone else's assets that they can actually go after to pursue in the event of a default. Single people take more risk. That's just how it looks. And someone who's married and they possibly have children, they're less likely to be risky. So they don't seem as likely to default on any loans. So they are someone that they can actually look to as probably going to handle their debt more responsibly. Now, all of these things that I've gone over are different areas that banks use. And again, they get this information from credit bureaus and data furnishers such as LexisNexis. So with this information, if you understand how this works, you understand that the credit bureaus are only here because they would like to report information and they profit grossly from negative information. It would behoove you to learn more about them, learn more about their processes, and then learn how you can use them to your advantage, or to make sure that you can set up a scenario where you're more likely to be approved for things that you can use to, increase income, like taking money, leveraging debt, using that to make money, things of that nature. And I just want to say thank you for watching this video because, I do appreciate everyone watching. Again, this information I give you in hopes that you utilize it, and not just for clicks, not just for views, anything like that. I want you to be successful. I want you to understand how this works and then put it behind you. I don't want you to I don't want to see the same people 6 months from now. And I'm not gonna say that because it could take some time. But what I'm saying is, like, I don't want to see people who are trying to fix their credit, if they have successfully fixed it, back on these videos. I don't want to see you back on these videos. I want you to move past this, which is why, just like me, I want to move past it. We're moving past it. We want to move on, and we want to get to the point where we're trying to learn how to then understand debt, understand finances, to leverage this stuff to give us a better life, a better opportunity, to put our families in better positions, to put ourselves in a position where we can be happy, have more free time, and have more options, or at least the illusion of freedom is what I call it. So that is the whole purpose of, doing this, providing you this information. And that is why we're always looking forward and trying to figure out what is that next step in order to get to a better situation. All right. So again, thank you so much for watching this video. I truly, truly, truly appreciate it. And I appreciate you guys. So you have a wonderful day.